Hi there traders, this is Steve Miley, market chartist for FX Explained. Today we're going to take a look at the S&P 500 future in here, the E-mini future, and the short to intermediate term outlook. Well, global stocks in here pushing higher to get new recovery highs in here. You can see slight dip in here on Monday, but a strong recovery effort on Tuesday. Another new recovery high in here, maintaining this bullish trend that comes up from the end of March on the short term outlook in here, and really this acceleration that we saw last week higher. Remember, the S&P 500 had its best up week, and it was only a 4-day week. Its best up week since 1974. So a surging rally last week, taking out some important resistance points here from March, and also yesterday taking out this 28.39 and a quarter level. The market now targeting this important swing high in here from mid-March. This was the second acceleration point in here, having had this, or second/third even, having had these previous accelerations lower in here. We had this acceleration point from 28.84.75. If we take that out, from our perspective, that's going to neutralize the intermediate term bear trend. Now, it doesn't mean we go into a bull trend, but what it does mean that the downside risks back to this 21.74 low have been reduced in the intermediate term basis, and we go more into a range theme, a bigger range theme. And I could easily see us being in a range theme for multiple months now, between the all-time high up here and then this low that was put in late March. So 28.46, the immediate upside target. 28.84.75 is going to be critical, and we're looking for further upside going into today. On the downside, it's going to take a break below 27.80 and a half on the downside to open up a deeper correction risk for like 27.52 and a half, and maybe below there towards the low 27s, high 26s. So, but for now, we're looking for 28.46 and up to 28.84.75. So market's very much in a risk on theme in here. We're continuing to echo the fact that we've got the plateauing and in some instances decrease in Europe of new cases and deaths from COVID-19, plus discussions on easing of some lockdowns amongst major economic nations in here, all pointing to a risk-on phase. In the FX space, we're seeing Australian dollar, New Zealand dollar, Canadian dollar benefiting from this. The US dollar continues to weaken, and global equities pushing higher, and we're looking for this S&P 500 to make new recovery highs and maybe challenge this critical level going into today. It's been Steve Miley for FX Explained. Going to wish you all a great trading day, and as ever, be safe out there.